Good morning, it's Wednesday, May 7th. This is the second time I shot this video because of the fact the audio went out here. So I'm Philip Streible here, Chief Market Strategist at Blue Line Futures. So looking at the markets overnight, you do have US equity futures. They did pop on that news that there was some talks that are going to take place later this week in Switzerland between Treasury Secretary Scott Bessent and all the other trade representatives with regards to China. So there's some optimism that a deal will get resolved here. So that's why US equity futures, they popped. You also did some earnings come out with Uber and also Disney. Disney was up about 6% in the pre-market. Now, the big focus here today is going to be on the Federal Reserve. They're going to have that announcement at 1 p.m. Central Time, but all the focus is going to be on Fed Chairman Jerome Powell and how's his tone. Because if you go back to January and March, he was quite hawkish. They left rates unchanged. And then you go to this month, all the pressure that he's received from the current administration to cut rates. Will he become a little bit more dovish, or will he have that wait and see type mentality? So expect to see some volatility in the markets when we get closer to that 1 p.m. and that announcement coming out. Now looking at some other things here, the volatility index flat, 2379. The option markets are showing that investors are really starting to purchase some put options, some protection, selling covered calls, things like that in the markets here rather than chasing this rally upwards. So looking at some other things here in the precious metals markets, you do have gold down about 1%, silver down about 1%, and also copper down about 2%. So a couple things, you get the optimism surrounding the trade talks, you get a big jump into the US equities. People cut that safe haven demand here, and it's safe haven assets like the gold market, like the treasury markets and things like that. The dollar index gets a boost. And if you look recently, the correlation between the dollar index and the gold market has been quite high. It's right around 98% here at the moment. So keep an eye on the dollar index because that can be your canary in the coal mine as far as, is there a turnaround? Does Jerome Powell come out hawkish? Do yields start to rise up? Does the dollar index recapture that 100 level? And then you can see some further pressure on that gold market. So look at the daily chart on the gold market. You can see that it could be setting up for another double top here. Look at the silver market trapped in this range going sideways. And then you look at copper at 468. So that's the big mover and shaker overnight, down about 2% here. And it was a buy the rumor, sell the fact here, where you look at China and the People's Bank of China, they cut their 7-day reverse repurchase rate to 1.4% from 1.5%. So they were expected to announce a lot of stimulus and things like that, and it just really fell short of expectations. And we've seen this so many times where it's a buy the rumor, sell the fact with China with their announcements regarding any kind of stimulus. You look at the ETF flows from the previous session, the exchange traded funds, they cut about 45,000 troy ounces of gold from the previous trading session. So it's the third straight day of declines. Then you go to the ETFs on silver, they cut about 1.7 million ounces. So that has also trimmed off some of its gains as well. Palladium, interesting one, starting to break out slightly to the upside here, tacking on another gain. It's the only metal that's up here at the moment, but it's been the 10th straight day of outflows in that particular ETF. So you go to the year-to-date percentage change on the gold market, up 7.1%, small decline. Silver up 2.1%, small decline. Gold-silver ratio sitting at about 102.5 or 103 to 1. Quite high here in my opinion. The recent low has been that April 23rd low of 97 to 1. Now, something else to note is that China, they do keep adding to their gold reserves. Right now, they've done it for about 6 straight months coming into April. They are close to about 1 million ounces in gold holdings, but central banks globally, if you look at their percentage of how much gold they own to their total reserves, most average central banks are right around 20%. China is only at about 8%. So if they continue to add, that's how you can get that 3,700, 4,000, 4,500, and 5,000 mark to the upside. Now, so looking at the markets here, just a general broad-based look, we are going to just be focused here solely on the Federal Reserve today. I expect to not see too much volatility and markets really slow down until we come into that news event. And then from that point forward, it should be chaotic the rest of the trading session. So you guys got any questions? Sorry about the audio. Sorry about the delay on the video here. You know, crap happens. Nothing you could do about it. So, but remember, futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. If you need anything, shoot an email to info@bluelinefutures.com. Thanks, good luck, and good trading.